Welcome to GRE. I'm your host, Keith Weinhold. Today's show is really about you. We're talking to a Get Rich Education listener, how he found out about the show, how it changed his life, what he's put into practice, and exactly how his real-life successes and failures have looked. No best-selling author or mega-investing influencer on the show today. It's a real GRE listener, perhaps somewhat like you, today on Get Rich Education. You can get a 50-year-old house somewhere or buy a new one directly from the builder with tenant-resilient amenities already built in. With over 3,000 Florida units at different construction stages, they are exclusively for investors. President Wagner and Alaska and team also invest strongly in their own product. That's belief. Start at buildtorentdirect.com. That's build the number 2 rentdirect.com or text 407-927-5074. You know, a lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both: Jacksonville, Florida. They've got 27% lower home prices and higher rents than the national median. Their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and above average appreciation for tomorrow. They often have available inventory in Jacksonville, if you can believe that. Start at cashflowandgrowth.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Kingston, Jamaica to Kingston, New York, and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education. I really like these shows where we talk to a GRE listener that's educated themselves first and then gotten out there and taken some real action with real estate investing. That's because I think that you, the listener, can find this relatable. With this show being on the air every single week for almost 7 years now, it was about 4 years ago that we started having listeners come onto the show once in a while to tell us how it's really going for them and how GRE has changed their life. That's because a few years into the show, the effect of having both residual income and 5 different profit centers can really begin to have a pretty profound effect on your life. And at times that does come with some difficulty too, just like anything worth having in life can come with some difficulty. So I want to ask today's listener guest about that too. The first time we did this, it was listener Douglas Orr of Indiana that was on the show. I do remember these people. Hey, if you want to get in touch with GRE here, there are a lot of ways that you can do that, whether you have praise or concerns, or if you want to be the next GRE listener guest here on the show. The best way is to visit our contact page at getricheducation.com/contact, where you can leave either an email or a voice message. Because it looks like I have a lot in common with today's guest, I expect to comment more about this after the show once I get to know him some more. So let's meet listener Eric Schodowski. Today's GRE listener guest is an MBA. He's an industrial and manufacturing engineer at a Fortune Global 500 company. His passions include family, friends, continuous improvement, investing, fitness, and nutrition. Wow, sounds like an efficient guy here, a high performer. He is also sharing his email address with you because he likes networking and sharing ideas with other real estate investors. You can reach out to him at Eric.LaBlue@gmail.com. Welcome in, Eric Schodowski.
Thank you, Keith, for having me. It's great to be here.
I know you've been listening to the show since early 2019. You got a word of mouth referral from a friend. You attended our October 2019 Tampa field trip. That was our last live event before the pandemic hit. And I still remember specifically talking to you in the hallway outside the conference room. So you're from Cleveland. And I know you were saying earlier you're more proud of it now that the Browns were 11-5 last year. They actually had a winning record. And you actually live in Baton Rouge, Louisiana now. So just tell us a bit more before we talk about real estate, Eric, about your personal life and your work life.
I'm an engineer and a manager. I've been in various engineering and management roles personal life. I really enjoy investing, reading, working out, fitness, things of that nature. I worked for different companies, so bigger companies that they've offered good salaries, good pensions, 401ks, but I knew I wasn't really building real wealth. At one point, I knew I needed to change something. I needed to change what I was doing, which is basically nest egg theory, to something much better. And I learned about that as I stumbled across Get Rich Education. I was reading books before that. I read Tony Robbins' Master the Game, some things like that. Get Rich Education, I really found to be much better than that. Money Master the Game was weak sauce compared to Get Rich Education. So really excited about my financial future at this point.
Oh, thanks for that. That's quite a compliment. Yeah, you let me know that you went in and listened to the GRE podcast from episode 1 because you kind of got some feelings that you never had before, some thoughts that you never had before because you were never introduced to concepts like leverage or arbitrage or inflation profiting. So tell us more about sort of that cathartic process.
It was really cool because I had never actually dabbled in leverage per se or inflation hedging before. But once I heard the concepts, it just became so real to me that these are actually real concepts that work because I knew inflation was real, but I didn't know how to make money off of it, right? Or how to benefit from that. I was always on the other side of the stick, right? So it was just really cool to be able to learn real investing techniques that work. And I've been at it for a little under 2 years now. And I can just see it unfolding. And I can see the leverage, the inflation hedging, the arbitrage going to work. And it's just a fantastic experience.
Once you understand some of those concepts, there are a lot of ways to play in real estate. And a pretty easy way, especially for a beginner, is with turnkey real estate investing, where you're a direct investor of a property that's already renovated, tenanted, and managed. And that way, when you're a direct investor, you often do get paid up to those 5 ways at the same time. So can you tell us more about the learnings and taking some of those key learnings and transitioning that into being actionable, Eric?
I started listening to the show and I almost felt behind. I almost felt like I should have been doing this 5 years ago or 10 years ago or something like that. And I got into it pretty quickly. I ended up just jumping into 6 units. It was all in the same day, actually, which was just interesting the way it worked out. So I ended up buying a four-plex, 3.5% down, very similar to how you started off. And then the other one was a duplex. This was a really cool property. 6 units in one day. It was a little interesting telling my boss what I was up to that day. I made it happen. I signed both of the documents and got out of there. But these investments have been not only great teachers, they've been great learning experiences, but they've been really fruitful in terms of wealth building. So it was just getting to a place where I was able to ended up switching jobs. So I basically was able to access some of my 401k and pension funds at that point. So that made it a lot more feasible for me to be able to take the tax hit early, betting that I would do better, with the compounding effects of the 5 ways you get paid from real estate investing.
Yeah, a lot of people think they don't have the capital to get started in investing. Well, oftentimes one does in their 401k, but some people regard the 401k as sacred until they learn about, hey, you can take the tax hit early and you're almost certainly, if you know what you're doing, you're going to outpace that substantially with real estate. And the important thing is you actually get paid when you're young enough to enjoy it. Those income streams can begin now, not in your 60s or 70s like they do with the 401k. But yeah, just dropping back. So you talked about the owner-occupied fourplex that you did with a 3.5% down FHA loan, which is just the way that I began, where you have to live in one unit for at least a year, and then you rent out the other 3. And was that one in your home market of Baton Rouge?
Yes, that's right. So I bought it from a local LLC, and then it was a pretty interesting property. So this property was a difficult one for a beginner. So there was a lot of deferred maintenance. There were some things going on that it's by the railroad tracks. It's the fourplex among fourplexes. It's probably a little better to have one that's among single family homes, right? So these are the things that you learn along the way, but it's been a great teacher. And I ended up, it was tough to rent out because of the COVID situation and just because of the timing of the year and the other things that I mentioned. So I took that time to renovate every unit. The rent's gone up about $200 per unit since, and the property's appreciated very nicely as well. So those are both really positive things. I hired a property manager. Immediately, I bought renter grade materials. I increased the purchase price when I bought it in order to sell, for the seller to pay for the closing costs, rather. So these are all tips that I got from GRE, so thank you. All those things helped out very well. So On this property, my returns, 1-year returns, are estimated 120% despite all the renovation costs. And that's due to that high leverage, right, situation. So that helped out a lot. And the property management was huge because I don't know if I could have pulled it off without that. I work a full-time job. I would do it all over again for the learning experience, but I'd rather buy turnkey. It just hands off. It's easy. You typically just sit back and enjoy the 5 profit centers.
Yeah, that's right. That first four-plex that I began with, there were 3 identical four-plexes in a row, and mine was right in the middle of these 3 identical four-plexes, so it actually had the worst views. But you talk about how you close on 6 units in one day to start out with. You discussed the four-plex, and then the duplex was a turnkey property in Florida. You talked about how you favor turnkeys because it is more hands-off. So tell us more about the turnkey pros and cons.
Yeah, turnkey pros, the 5 profit centers are working for you. So you have all those. You've got a lot of selection. So you can just basically do your research. There's products. I tell people it's almost like going to the store and buying a product off a shelf because it's pre-calibrated for you to perform. Like that's what the thing is meant to do. And it's done by professionals that have done this hundreds, if not thousands of times. And they have warehouses with toilets and shingles and all these materials. And sometimes when I talk to people about real estate investing, and they're like, yeah, that sounds good, but maybe I'll go and I'll do a flip. And they've never done anything before, right? And I'm like, there's these experts out there that do this for a living. They've done it thousands of times. They have warehouses of toilets, and they can create value for you and for them and deliver that value to you as an investor. And it's a very safe bet. It's the highest return, lowest risk investment that I'm aware of right now that I know how to get into.
That's right. I see turnkey real estate investing as the best risk-adjusted return out there. And it's interesting how you bring up the management component, Eric, because now that you've listened to the show and you have a greater wherewithal of basically getting this national arbitrage, if you will, because you're able to go into an investor advantage market, I realize oftentimes that there might be someone in New York or California that's a real estate investor that's getting a, say, 0.3% rent-to-value ratio, and they're managing it themselves, where you could get 0.8% rent-to-price ratio or higher in some of these other markets. And the management cost is already considered. So these are some of the advantages of going out of market. And I know you've invested in a few GRE turnkey markets now.
Yeah, absolutely. So the ones that I'm actually focusing right now are Florida and the Tampa area, in Tennessee, Mid-South Homebuyers, in Indiana, Complete Asset Protection Services. And they've all been great to work with. Those are the markets that I'm really portfolio building in right now, although I'm doing a bit in Baton Rouge because I'm here, so it just makes sense. And I remember you saying on previous shows, what are the odds the best properties are in your own backyard? I'm finding that to be true, even though there's a lot of good things for Baton Rouge. That the rent-to-value ratios make sense here. The market, it's a state capital. There's close to 800,000 people here. However, there's no turnkey providers that I'm aware of that I've run into, so that makes it a little bit more difficult to get into something.
That's right. Turnkey providers, they sort of handpick the properties for you besides getting them into that investor-ready and tenant-ready condition at the same time. We're talking about geography here. So outside of just Baton Rouge, where you live and where you bought that fourplex, the 3 markets that you've selected, number 1 is Northwest Indiana, which is basically Chicago land because that flows over into Northwestern Indiana. The second one in Memphis, and then the third one in West Florida. Are there any particular things that made you choose those markets? Is it because they're more geographically disparate, or is it because you see one providing higher cash flow than another, but yet a different market might provide more appreciation potential than a cash flow market? What made you choose those?
Great question. The number one reason is because I put so much, trust in your network, and you guys have done a lot of pre-vetting. And then, of course, I did my own vetting after that. Basically, what I did was I reached out and everything seemed right in Florida. I really like Florida for the appreciation. Yeah. I found that you can get appreciation, and the property that I own in Florida cash flows very well as well, which is fantastic. Mid-South Homebuyers in Tennessee, I really think they're just a great anchor. They're a very reliable product, stable market, tons of renters there. And then in Indiana, you get that geographic arbitrage from Chicagoland or the Illinois side. It's just great cash flow market there. I mean, that's very much a summary, right? There's a lot more to those markets, but those are some of the main things that I like in them.
In order to fund these purchases, you had this basically lump of cash that you had from a cashed out 401k. Is that what you did to make typically 20% down payments into the turnkey properties, Eric?
Yes, that's right. I typically try to make my leverage as high as I can because you get more pronounced returns. I had 401k and pension funds that unlocked when I switched companies. That money I was able to roll over into real estate.
Why don't you talk to us about the numbers on a typical purchase? I know every purchase is a bit different, but can you tell us what might have attracted you to say, I would want to buy this property in Memphis or this property in Northwest Indiana rather than another one? What are the things you're looking for?
I'm looking for jobs, population increasing over time. I'm looking for a reliable turnkey provider. I'm looking for quality product that they produce. Also, the returns that I want as an investor is the top priority because based on my personal goals and interests, those returns have to line up with what I'm looking for in my investment timeline. So whether I'm looking for cash flow or appreciation or security, what have you, I mean, I found them all to be pretty secure investments regardless. However, I'm trying to do a little bit of diversification in terms of, so I'm trying not to make it all cash flow. I'm not trying not to make it all, a super high cash flow market or a super high appreciation market. I'm trying to not put all my eggs in one basket.
And you've scaled up to, I think it's 11 units now. And does that include the four-plex in Baton Rouge that you've done here in just about 2.5 years?
It's 11 units, that I've scaled up to, and that does include the four-plex. It's been a great learning experience. It's been a lot of fun. And one of the coolest things about it, it's like people in life, they have different goals, right? Whether it be like with relationships and health and wellness, fitness, or finances, right? This opens up a whole new world of networking and people that you can collaborate and friends that you can work with and just getting into the process. And I knew this back when I first started trading stocks. I was like, I'm probably going to start trading stocks just to learn about stocks, right? Because I can't learn anything about stocks unless I have a little bit of money in the game. It's just really cool. Like once you actually get your foot in the door and you start investing in turnkey, how it just kind of makes you just seek out all this information and other podcasts and other books, and you collaborate and network, you go to live events. I've done online courses, so it's great it's engagement fuel.
Yeah, there are a few mindsets about getting started in real estate investing. One piece of conventional wisdom says you should only invest in something that you can understand. And there is something to be said for that. No one should just jump into anything. But I think from a primordial level, it's rather easy to understand that a person will pay rent to you in order for them to be able to live there. And then once you do have a little education, yes, starting and actually jumping in and getting that first monthly cash flow check can give you a context and an understanding of this like nothing else can.
Yeah, absolutely. And I listened to your show, I think it was probably about 9 months before I first got started. So I had a good amount of get-rich education under my belt before I got started. And of course, other sources that I was seeking out as well to learn what I could. And it's just been a great experience so far.
Okay, so actually that would be 11 units in less than 2 years since you listened to the show for a few months before you got started. Well, this has been great. I'm going to come back with Eric, and I'm going to ask him about any problems that he might have had along the way and more. You're listening to Get Rich Education. Our guest is listener and guest Eric Schodowski. More when we come back. I'm your host, Keith Weinhold. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to four-plexes. They're the #1 lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash-flowing portfolio. Start at ridgelendinggroup.com. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you, but you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000.
This is author Kristen Tate. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. You're listening to the show that's created more financial freedom for busy people just like you than nearly any show in the world. I'm your host, Keith Weinhold, and today's show is really about you, the listener, and then having a listener and an action taker, Eric Schodowski from Baton Rouge, Louisiana here. So, Eric, you've been telling us about these 11 units that you have now. You do talk intelligently about how the market is more important than the property. That's so key. That's something we talk about here a lot, such that in-migration exceeds out-migration, and there is job and population growth and really a diversification of economic sectors in an area, which is something that you do get when you stick to the larger metros. When we winnow down to that property itself, and once you've identified some of those fundamental things, tell us more about those specific numbers on a typical purchase. Are you looking for a certain cash flow amount or rent to value ratio before you click buy?
I typically like higher cash flow opportunities. I tend to look for, and today with the interest rates so low, I could even get away with going a little bit under 1%, but I still find that I can find properties for 1% plus if I look hard enough. So this one is actually not typical, but I'll go through it anyway because I think it's going to showcase what potential there is in the Indiana market for cash flow. So I purchased a single family home with caps in May 2020. I found this one through an email sent straight to my inbox from Keith Weinhold. And it's a 2-1 in Lake Station, Indiana, with proximity to Chicago. Caps did a great job with the renovation. And the purchase price was $70K and the rents were $1,050. It actually appraised for a little bit less than the asking price. And they just decreased the price for me. And it ended up being a 1.5% rent to value ratio on this property. Yeah, which was, I couldn't believe it at the time. I had never seen anything like that on anyone's site or anything. So I was pretty happy with that. The actual cash on cash return on this property was 40% over the past year. And there was actually, and this is one of these markets that typically just crawls along and does 2 or 3% appreciation year over year or year after year. But this property has appreciated 36% since I purchased it less than 2 years ago. When you add an amortization, inflation hedging, and tax benefits on top of those, you get 140% return plus for the past year, which I was just like, wow, this is phenomenal. So I was really happy with that one. And the other example that I had to talk through was a duplex that I bought through West Florida. And this one had about a 1.2% rent to value ratio. It's a duplex, and duplexes can have a little bit higher rent to value ratios. Yeah. The property had a $185K purchase price. It was really well renovated in a great neighborhood. It's a hassle-free property with granite countertops, new appliances. The cash on cash on this one was 15%. I bought this property, of course, under 2 years ago, and it's appreciated an amazing 50% since I purchased it. So over the past year, I've calculated a 125% ROE on this one. It's similar returns to the four-plex, but infinitely less time and effort. It's just amazing what Turnkey can do.
Right. Turnkey, helping you with that ROTI, like I say, your return on time invested is often a more important metric than your ROI. It sounds like you got a good ROI when you had to put some elbow grease into your fourplex, but that was time that you put into that as well.
Definitely, Keith, definitely.
Yeah, some of these rent to price ratios are remarkable and can't quite be found as easily these days. When you opt in for a report at GREturnkey.com, sometimes with the providers, not very often, but when you opt in for a report there, you're on a list where sometimes we get property listings and then send direct addresses to people that are on those lists that have opted in at GRE Turnkey. Yep. So it sounds like that's how you found the property that's performing really well in Northwest Indiana.
Yeah, as well as the duplex, actually, which they were both sent from, the one was from Best, the other one was from Get Rich Education. So absolutely.
Terrific. Real estate doesn't come without problems because it deals with properties. And even in this increasingly digital world, real estate is still a pretty people-centric business. And there can be problems with properties and with people. So can you talk to us about any problems that you've had on your journey since you bought your first property, I guess, close to 2 years ago and have scaled up to 11 units? So we're now talking about 4 different markets and different property managers and such. So anything there? Because it's nice to hear about the upside. You've had some fantastic upside, but problems are really where we get the lessons.
Yeah, absolutely. It's a great point. And the fourplex has been rewarding, a great learning experience, but it's also been a considerable challenge. So I picked up the idea through GRE as we had talked and made plenty of mistakes along the way, but that makes it my best teacher. I've dealt with, and this is plural, floods, evictions, tons of repairs, renovations. I renovated every single unit. I ended up learning a good deal of electrical and plumbing to try to save on costs. This four-plex had good bones, so there's pros to it too. I purchased it at a good rent-to-value ratio, 1.2%. I feel like I got a fair price. But like I said before, it's the four-plex among four-plexes. It's by the tracks, lots of deferred maintenance. So those are some of the things that I was really I actually thought about selling the four-plex multiple times. So I'll put it that way. I put about $30K into it. But after you get over those hurdles and those humps, you look back and you say, at least this has been my experience. Wow, that would have been so much easier if I had to do it again. It would have been like twice as easy. And I wouldn't have made that mistake before. So you kind of see how it's just teaching you, and you learn what to do, you learn what not to do. And on the other side, it's appreciated very well. The returns ended up being good. Rents are now about $200 a door higher. I remember you had a guest on a while ago where he said something along the lines of, it's pretty hard to lose money in real estate. I mean, I know you can, and it's definitely possible, and that happens. But his opinion on that show definitely reflected a little bit in this four-plex experience, because so many things went wrong, but it still ended up being profitable. So it's a really interesting scenario for me.
Yeah, just on the fourplex alone, you do mention a few different problems. I think I heard plural floods and at least one eviction. And this makes me think, you mentioned by the tracks there, Eric. Was the fourplex bought in an area where you can attract a respectable tenant? Because sometimes even with upgrades to a unit, that doesn't improve the neighborhood. So can you attract a quality tenant in that Baton Rouge fourplex?
These fourplexes they're a little bit more of a C-class. The area over here is such that there's a lot of really nice new townhomes coming up that you have to compete with. I've had trouble getting the rent for what I thought it was worth. Before I renovated the properties, I was down to, I rented one unit for $685 a month. And this was not a respectable tenant. They actually took off with the washer and the dryer. And this is one of the eviction cases. And I was like, gee, but after I renovated the units, that attracted a higher quality of tenant. That's something that I learned, along the way as well, is that if you want a respectable tenant, if you want a good quality tenant, you have to have at least a decent, presentable, clean property with some nice things in it. So that really helped a lot to get respectable tenants in. And I believe that I have done much better there after the renovations.
This raises an interesting point, because a lot of people think about, well, if I improve this unit, that'll take the cash flow from, say, in your case, something lower rent, maybe $685 up to $900 or whatever it is. And that might make the property more valuable as well as you getting more rent. But the thing that it does is it typically increases your tenant quality, because in general, higher quality tenants can afford higher rent. So I think there's a good lesson there.
Yes.
Eric, do you have any general thoughts, especially when it comes to beginners and buying turnkey property and getting in like you did? It definitely sounds like you've had more good experiences than bad when you've thought really strategically by knowing that the market and the provider are more important than the property, and then going the direct ownership through the turnkey route. Is there anything a beginner really needs to know?
As Keith alluded to and said, well, there's going to be road bumps. Things are going to happen. Everything that we do in life has risk, but I found turnkey to be a really low risk, very high return investment overall. And the tax benefits are absolutely amazing, which is we've covered before, and various folks have said in the show that tax is your biggest expense. So that it's absolutely phenomenal from a tax benefit standpoint. And in my view, turnkey is great for beginners. It's really low effort, and there's not a lot of know-how needed. Like I said, it's kind of like going in and buying a product off a shelf almost. You do need to do your due diligence and understand your investment preferences and all of those types of things. I remember you saying, Keith, on a previous episode, the only thing I would have done different is buy more cash flow real estate sooner. In my experience, I couldn't agree more. And just hindsight's 2020 looking back, if you haven't purchased your first investment home yet, I'd really encourage checking it out.
Yeah, great. It is true. I have said in the past on an episode that if I could change anything in my investor life, number one, I would have bought more. And number two, I would have bought sooner. And thirdly, I probably wouldn't have weighted myself so heavily only in my home market. I didn't begin buying out of market until 2012. I didn't have that greater wherewithal. So the architecture of your portfolio really looks pretty favorable, Eric, with you being in Baton Rouge, Memphis, West Florida, and Chicagoland, which is Northwest Indiana. Do you plan to add any other markets, any other thoughts, or do you just want to build out the four markets that you have currently?
I'm kind of looking at these markets. I'm also kind of thinking about potentially Texas, potentially Alabama. So you've got some providers in those areas. Those are the two that I'm kind of thinking about, but I may just go back and buy another home from Mid-South as another play. I'm not sure. So it's kind of have to be a game time decision. I'm doing a cash out refi currently. So I kind of have to see how that shakes out, what I can afford, what I can't, and what's available at the time in terms of inventory.
Okay, so you might get more funding from a cash out refinance. Is that in the four-plex it's appreciated so nicely?
It's actually the Florida duplex. That one it appreciated 50% since I purchased it, which is just a fantastic return. I did put 5% down on the four-plex, and you have to leave 30% in when you take it out now. So that makes it a little bit harder. Even though it's appreciated really well, you still have to leave all of that in, which makes it, I think I'll be able to do it in another year or two on the four-plex.
Right. So leveraging more property. And when you do that, typically when one harvests equity, no equity is lost. Equity is merely transferred from one property into another. And then, of course, one also has the advantage of, all right, well, now they have that equity in multiple markets and it actually lowers risk and a lot of context. So, okay, that's where future funding might come from. And yes, often one gets up to that 10 loan limit with their golden ticket Fannie Freddie loans. I know you're getting up close to that. And then after that, one can do non-QM loans at a place like Ridge Lending Group, although they're going to be subject to a higher interest rate, or one can go into commercial loans and larger properties, or one can really go big and do syndication.
Yeah, I mean, those are some things that I'm definitely thinking about. I would love to get into private money, any type of seller financing deals or creative seller financing deals. Syndication, like you said, is a very high interest point to me as well. I'm taking a course right now on apartment building investing. So I'm trying to just at least broaden my awareness of what's out there so that I can take action if the time is right, and just learning some of their methodologies. Like, how do you actually get money for syndication? Like, how does that work? And what are all the legal requirements behind it? And it gets a little bit, there's a lot to learn, but if you have a good teacher walking you through it, it becomes a lot easier. And that's what you can do with some of these courses that are out there.
Yeah, you're doing a great job of answering really what's next for that beginner once they have their first 10 Fannie Freddie loans if they're single, or 20 married. What's next? And so those are some of the things that can come next. Eric, this has really been valuable for our audience to virtually get to know you a bit, a real investor, learning and then applying what you've learned, kind of moving at the speed of instruction is what you've done. So really, thanks for sharing your story and being so forthcoming with the numbers and everything else that you're doing. So you have any last thoughts for our listeners? And I know you might want to leave your email address again as well.
If it's the right thing for you, if it's right for your investment preferences, like I said, I think it's a really low risk, high return investment to do turnkey. I just really encourage, checking it out and really deciding if it's right for you or not, because I think it can be a real benefit. I can be reached at Eric.LaBlue, like the color blue, at gmail.com. And I just enjoy talking shop and networking and collaborating.
Eric Schodowski, you're not merely living below your means, you are expanding your means. Thanks so much for coming on to the show.
Thanks a lot for having me, Keith. It's great to be here.
Yeah, great stuff from Eric. His last name is spelled Schodowski. With his MBA, I'd say that Eric has more formal education and professional experience than some of the listener guests that we've had here before. In fact, he has more of those things than I do. Eric's also been a great ambassador for the show, telling family, friends, and coworkers about it. In fact, when he came on our GRE real estate field trip there in Tampa, he brought his boss with him. And yeah, I do have a lot in common with Eric. Investing, family, fitness. We both like maps. In fact, as Eric and I chatted, there was a U.S. wall map over his shoulder. I think I've told you before on the show, I have used a map to affix a little red sticker, like a round dot, in all of the places that I own real estate. You can kind of become a collector of real estate this way. To pick up on the fitness theme and what it has to do with investing, it's something that people often don't discuss. And I was recently a guest on a different podcast where I was talking about this. Most people trade their time for dollars at a job, and that's their only income. They sell their time for money for decades, and that can take a lot out of you. If your grind stops, your income stops. Instead, with the first property or two that you buy, income begins to occur and recur, and you did not have to materially participate for that income to come into your life. And as you add properties, you soon get this mindset of not feeling like you have to come into work on a Saturday on a special project or work any overtime. Or maybe you can even switch jobs to take a job that pays you 30% less, but it leaves you feeling fulfilled at the end of the day rather than drained at the end of the day. And when you've got more energy in your life, you're more motivated to work on things like your fitness. I quit my job more than 5 years ago. That's what happened to me, and I got more physically fit. Just imagine you in your life. If you sort of learn about residual real estate income streams at age 30, such that then by age 35 or 40, you've really opened up substantially more time for yourself, maybe even quit your job. And I mean, this ability for you to sort of buy time in your life, it opens up time for both family and fitness and whatever else. You might be able to get more fit at age 50 than you were at age 30 for that reason. 30-year-olds are typically grinding hard at a job. It's harder to find the time to be fit. Generations ago, people were seen as physically over the hill at age 40 or maybe even younger than that. And that's because back then, a lot of jobs were blue-collar jobs. In the 1940s, you were physically worn out after a day in a coal mine. Well, today, most jobs are white-collar. People are desk jockeys, as they say. You might not be quite as worn out and used up early in your life. Your body just is not used up as soon. Then, if you find an ethical way to provide value to others by creating good housing situations for them and have residual income, which creates that extra time, then why wouldn't you be more fit from age 30 to age 50? You got more fit at 50. So you're able to think about things now in ways that you never thought about before. And say you got a late start, well, so what? Then be more physically fit at 60 than 40. This is good news. Find ways to buy time. Or really, you don't get any more time on this earth, but you find ways to buy your way out of crummy work situations or just unfulfilling work situations and enhance the value of your time by replacing that with doing what you want to do, also known as financial freedom. That is going to take some unconventional moves. Now, like with what Eric did, the conventional wisdom is that withdrawing 401k funds, that should only be done as a last resort. Well, that thing is an old-fashioned notion, thinking that way with that conventional wisdom. Again, a 401k is a salary reduction plan, just like the actual inventor of the 401k himself, Ted Benna, corroborated for us right here on this very show a few years ago. If Human Resources lets you tap your 401k and you do it before age 59 and a half, you do have to pay tax on it plus a 10% penalty. Well, you'd have to pay tax when you tap it in retirement anyway, and the 10% penalty will often be way more than offset with something that pays you as many as 5 different ways. You've also pivoted from that salary reduction plan into a salary increase plan when you're actually young enough to enjoy it. Now, after going the owner-occupied four-plex route, which is the same way I began, Eric pivoted into out-of-state turnkeys again, just like I did, and he found that that's a better return on time. Turnkey real estate is great for beginners and veterans too. Although I own dozens of units across several states today, my last several purchases were turnkey properties from GRE Turnkey. And what's going on over there at our sister website is that in general, the Alabama markets cash flow fairly well. The Ohio and Indiana markets probably cash flow even better. You get really good cash flow too in Memphis and in Little Rock. Now, if you're looking for brand new construction property, a lot of those markets are in the south and southeast where you have lower cash flow, even minimal cash flow in those new construction homes. and better appreciation potential. Those markets tend to be in Florida and Texas right now at GRE.turnkey.com. By the way, that site is probably going to have a name change in the near future because more than just turnkey property is offered there. But even then, GRE.turnkey.com will direct you to the new page. Numbers-wise, with today's low interest rates, 0.7 to 0.8% or higher in a rent-to-value or RV ratio is generally what you want to go for. Some investors, they tell me that they don't need the cash flow and it's just not that important to them. But although that's not how I buy, I know some people are more than content with real estate's other for-profit centers, the appreciation, ROA, tax benefits, and inflation profiting. Well, that's something that you're more likely to expect if you buy property for less than 0.7% in RV ratio at GRE.turnkey.com. Big thanks to listener Eric Schodowski today for both taking the time and opening up and sharing his portfolio with you. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.